Hello everyone, K Kim here from Traders Club. I thought I would do a quick video on the overall market, but you know what? This video is going to be special because I am not putting in this video on my blog, nor I'm not going to tweet it, or I'm not going to share my Google Plus, or I'm not going to share my Facebook. This video is for you guys who have subscribed to my YouTube channel. So I'm going to put it in my YouTube channel, and I'm just going to be quiet about it. So it's just going to be a little secret between you and I, and let's get to it real quick. We'll look at what I'm going to look at is today I'm going to be looking at financial sector, and I'm going to be looking at just basically every single indexes. We'll look at transport, Russell 2000, Diamond, Spider Qs, and let's get to it real quick. We'll start with the financial for a second here. What I want you to see on financials here, this is a daily chart on FAS, and you can see that we have broken this uptrend support here, and this is a very crucial that we have broken this support. Does not mean that I don't think that this is gonna just continue to tank right away because of where we're trading today. Just because after this huge bullish move, we're gonna need some kind of momentum to build before we can really crack that thing. So what I'm really looking for is right now we're seeing on this support right here, and you can see that this becoming old resistance becoming a new support. And this is what I am speculating is that what happens is this old support that which has been broken, and I believe that this is gonna become a new resistance because right now we're sitting right here on this support, which is new resistance. I wouldn't be surprised. I mean, we can grind here for a couple days, but I wouldn't be surprised it comes back up, test that as a new resistance, which also that is gonna create that right shoulder, left shoulder, head, and then upon testing that as a new resistance, we're gonna test it as a new resistance, but also we might be creating that right shoulder, and then when the right shoulder is created, rejected and fail, and I think that's when the true potential of this bearish move is gonna come. And I think we're gonna take this 100 SMA coming over here into consideration. We can take that, grind a little bit, come back up, initially taking that as another left shoulder, right shoulder, and then have maybe fill this entire gap here. Again, I'm kind of speculating what could happen, but that's kind of what I see happening here. But nonetheless, I really think that bearish momentum is starting to build, and we're gonna see some bounces here and there, but I think we're done making higher highs. What I mean by that is making these highs. We're gonna come back up here, fail to make a higher high, thus making a lower high, come back down here, maybe find some support at this 100 SMA and this support vicinity, go back up, make another lower high, and then creating that left shoulder head, right shoulder, and then go down. And this is a very common on the indexes. Let me just prove it to you real quick. If we just go to Diamond here, we're just looking at this 2012 October chart here. If I just draw this line right there, you can see that this has been support. We break, find support back here, went back up, test that as a new resistance, and then it tanked, right? And also I want to go to a transport, and that's exactly what happened to transport. We're looking at transport IYT ETF for the transport. Support. We broke that support, found that support back here, and then it tested as a new resistance. But then in that process of creating that as a we're testing that as a new resistance. In the process of testing it as a new resistance, what we did was we created that right shoulder. That's what it happened as the top of its bullish run, is that they're not gonna just crack. What it needs to is first it needs to break that momentum first by breaking this momentum, by breaking that uptrend support, and then comes down a little bit and goes back up, test that old support as new resistance, which is back here. While testing that as a new resistance, we create that right shoulder. Okay, we create that right shoulder. So currently, initially, we had a mini head and shoulders back here, but then in a bigger scale, we had that left shoulder, right shoulder, and on transport, we are sitting right at this support level here, which is a neckline, so upon breaking this neckline, probably meet with the 100 SME back here and then jump back up, test that as a neckline resistance, and then we can come back and test that 200 SMA coming back down here, possibly even fill this entire gap. And that's what I see transport. Let's go to Russell. We're looking at Russell 2000, and we're looking at also 2000 ETF IWM. But before we do that, I wanted to look at this comparison chart here. This is basically this vivid color chart is Russell 2000. We're looking at Russell 2000 index itself, also S&P 500 index itself, which is the little bit faded color back here. So what we're looking at here, we're looking at, back here we treble higher, and then, we formed this topping process on S&P 500 in the background. You can see that we had this symmetrical, this triple top pattern happening here. But what happened to Russell 2000 is that Russell 2000 showed more weakness, right? It was more leaning. It didn't quite gap back up here like S&P did. S&P was a little bit more, it had a little bit more strength to it, to this. But what happened was really then, S&P 500 really, was able to follow Russell 2000 to the downside. And what we're seeing right now is that they were traveling quite friendly here together, and then somewhere in this vicinity, S&P started really thriving, while excuse me, Russell 2000 here starting to really roll over. What happened at this vicinity is Russell 2000 already kind of broken pretty, I can't really draw a perfect trend line here on Russell 2000, but you can see that this has support. There's some space there, but that support there, we broke that support, came back, tested as a resistance, and then while they're testing that as a new old support, new resistance back here, we created the right shoulder there. So what happened was the Russell 2000 created that right shoulder, left shoulder, head, right shoulder, and it's already breaking that neckline. However, on S&P 500, we're starting to continue to go higher. We didn't quite form any kind of reversal pattern yet, but I do think that we might be on S&P 500. So that's I wanted to just present it to you. So we saw something back here. We could continue to happen if that's this, because what happened was in transport we didn't quite have that broken neckline on that head and shoulder, but Russell 2000 we already broke that neckline, which means there's a lot of bears coming in. I'm not surprised to see this thing coming back up here, test the neckline as a new resistance, and then tank and come back, at least to come back somewhere in this vicinity. But that's kind of what I'm looking at here. So let's go back to IWM. Right now we're sitting right there, and obviously that's going to be recent support, but it's not going to be major pivot area. But because of that 100 SMA sitting here, been acting as support, I do think that we're going to expect some kind of bounce back here. And that time, we'll probably meet with the 10 and 20 EMA, and then that neckline resistance. If that line fails to hold, price gets rejected, and then we can see this thing coming back to about 200 SMA. If 200 SMA find some bounce, and then we can continue to make that lower lows, and then this bear trend could continue to happen here on the Russell 2000. Let's go to Diamond real quick. On Diamond, we are starting to break this uptrend support here, as you can see that. And like I've talking to you about transport, and the Russell 2000, we broke that to support, but I am not, I won't be surprised this thing coming down a little bit next few days or so, maybe just a little bit more lower, just because there's support back here, and then goes back up, test that as a new resistance. Okay, in the process of testing the new resistance, we might be forming that right shoulder of this head and shoulder pattern, possible head and shoulder pattern, and then come down, test that neckline, and then come down more. So that's kind of what I'm looking at on Diamond here, and I am looking at maybe a few more days of grind lower before finding some support, and we could have another short-term bounce before coming back down here. And quickly, let's look at S&P 500. S&P 500 also look pretty similar, very similar to the Diamond. We broke that just very strong. long-term established uptrend support today, and then we're sitting on recent support here. I won't be surprised to maybe come back down a little bit low, just a little bit lower, to grind lower to fill the entire gap in this level here, and then maybe Monday or so, Tuesday, comes right back up, or next week, and then tested as a new resistance, failed, get rejected to go high, failed to go higher, get rejected on the price level, and then this thing tanks. In the process of that, we'll be creating some kind of a left shoulder ahead and the right shoulder there. So that's kind of what we're looking at. What's interesting about this pattern is that I want you to pay attention to. We're looking at diamond here. I want to go to 2007. Because I was kind of looking at studying the chart pattern, and just kind of, because I just remember, I remember seeing something similar to what we are seeing here. I just remember I seen that pattern before. So I just kind of went back and looked around, and this is what I found right there. This is actually diamond here on ETF daily chart. This is back in, you can see that July. This is July of 2007. That was before the crash. Okay, this is initially topping process, the starting of the topping process before this huge crash happened. Again, I'm not suggesting that that's what we are going to happen, or we're at beginning stage of that. Though I do have some significant early signals to prove, to argue that we might be getting into that, but I don't want to talk about that yet until I get a little bit more evident, proof to back up my words there before I get, before I don't want to, just freak everybody out. But anyhow, I want you to look at this, just this pattern here, kind of right there, and then it broke that. This exactly the same way, like we have support there. Again, this is 2007 diamond, and then we broke that support, came back down, went up, tested as a new resistance, failed to go higher. In the process of that, we created a right shoulder, and then it came back down to this level, and we found some support there. Okay, this is 2007 diamond, and I want you to come back here, spider. We're looking at spider, but diamond, spider, they pretty much similar looking anyway. So doesn't it look similar? We went up, went high, and then we left shoulder there, we broke that there. So could we expect this to come down a little bit more and then come back up, test that resistance as a new resistance, and then come tank, and then we're looking at here, this thing came, how far down did it come back here? This was that recently found, this was a resistance in the back of January, where we found some kind of resistance and we corrected. But when we look at today, this was a resistance level right here when we had that correction. So can we looking at something similar to that? Because I see this pattern very similar, coming back down, went up, and then comes back to about 148 level. 148 level. So that's something that I'm watching. And I've read in I don't know, I forgot which book it was, but it was written by well-known swing trader, technical swing trader, and he says something about every 5 years these kind of patterns do appear before the steep correction in the overall market. It does happen in the market indexes, and basically these things repeat. People don't really remember these. Every 5 years seems like the investors and traders continue to forget that this same patterns keep happening. They're not exactly the same, but they're somewhat alike, and I think that's kind of what we're seeing, because 2003 April we're seeing that, and back in 2007 July we saw this spike happening here. So that's very interesting, but I think that we're similar activities happening, because I always say that there's no, the market doesn't have emotions. Market doesn't have patterns. But we humans do. Humans have patterns. Humans have emotions. Humans are predictable. But we humans trade this market, and that's how we can able to benefit from these emotions and the patterns and things like that. So lastly, let's go to Qs. Let's go to Qs. Qs had just monstrous day today. I just feel like this was just so much aggression coming from bears, because can you imagine? Look at this. They just 4 days, we pretty much engulfed this whole move. If you trying to go long after the gap here, and you held it for, I don't know, for how long is that? 4 months, and you got about 66, 70, you know, about $4 move. But if you would have went short for 5 days, you would have the $4 move in 5 days. I mean, 4 days, pretty much. So you wait 4 months, you get $4 move upwards. You wait 4 days, you get $4 move down move. So you can see the how much grind we had here, and then all of a sudden Bear said, you know what, that's it. You're not gonna. I'm sick and tired of this just grinding mode. To be honest with you guys, I was sick and tired of this grind move, because if it was to move, I wanted to move higher so then I can go long. Or if it's gonna go short, I want to go, you know, if it was gonna go down, I wanted to move. I don't care which way it moves. I just want it to move fast so I can make money fast, right? That's kind of our goal there. So, you know, Qs looking same thing here. We broke this support, right? So pretty much same concept here. We could come back down, but back over here a little bit, grind a little bit, but going back up, test it as a new resistance, and then tank. In the process, we could be forming some kind of leaning right shoulder at this time. You know, one thing about Qs is that Qs like to form these head and shoulders formation before it does its correction. And then what I like to call it, this is a big head and shoulders formation. This is a gigantic scale of head and left shoulder, head, right shoulder here. But we have head and shoulders within a head and shoulder. What I mean by is we have a head and shoulder here. They're not perfect, but they have a definitely that sentiment, head and shoulder back here. And then ugly looking, but we are probably process of that formation of head and shoulder. So we got left shoulder, head, right shoulder. Within that head and shoulder, we have head and shoulders on left shoulder in the middle, and then right shoulder. And I think essentially this is a very, very dangerous sign. So that's why I'm continued showing the tech sector, Google, Amazon, and Apple, because those are the leaders for NASDAQ. And I think, you know, NASDAQ becoming very weak. I think with this head and shoulder form, you know, if this head and shoulder really pans out, I am thinking this thing is gonna come back down to about, you know, if this head and shoulder really plays out on a big scale, it could come back down to $54 level. Again, you know, it's too early to say that, but I do have, I'm not gonna get into it right now, but I do have reasons to believe that, you know, that we could get to $54 on the Qs. So here's one last little nugget for you to take home, and you can really, you know, really see why I am very bearish on the market. And I've been saying this for a while, at least a month or two, that market is fragile. It just I just didn't know, you know what I mean, exactly when it was going to correct, but you know what I mean. So I've been talking about it. There's a different signals that has been happening here, and one of the things I look at often is this divergence, because especially on the indexes, when these divergences happen at the top of its move, that's when could be very, very dangerous sign. Here this is how I'm gonna finish it with. We're looking at FAS here. As you can see that this level here, very important level. Why is it very important? Because this is the level last time we hit that level, this thing tanked. This was a 2011 when we had a mini crash on the financials. Look at, before the crash happened, we were able to see early indication that a recent upwards move right here didn't have much strength to it. You can see the bearish divergence. We saw same thing back here. Okay? And look at this right there. Look at that angle. This right there is this peak and this peak right there. So you can see that this made higher high, yet this MACD just rolled over very, very hard. And this is one of the reasons why I am anticipating something, you know, some very steep correction happening. That's the financials we're looking at. And I want to go to Russell 2000. Russell 2000, similar thing happening early here. Let me just come back here where it was, right? Okay, but I want to make sure that we can look at today's chart too. Right there. Right there. Right there. Okay. That was, I mean, we continue grind higher, but, you know, but what happened was MACD continued to show weakness, didn't it? I mean, it continued to make highs, MACD continued to make lower highs, and essentially this thing had its moment of correction. What are we seeing right now? That's what we're seeing at this. That's what we're seeing. Exact highs, lows on the MACD, and it's already rolling over. So I mean, we don't know, you know what I mean, are we gonna have come back down and then go back up higher? But I think it's gonna be a little bit different this point, because this looks like Head and Shoulders here, and this is where we had something like that in back here. So we could come back down and get up, but initially, you know, if we don't reclaim that high, which is back here, even though it could go up, but then sooner or later we could have some kind of steep corrective move back down to at least probably 75 or 72 area on the Russell 2000 here, looking at this MACD divergence. Also, I look at a transport, and I'm showing every single one of them because every single indexes have them. Every single this is where you pay attention, when every single indexes have them. You can see the divergence there, tanked. Here, back here, divergence there. This is a very steep divergence on transport. You see something like that, you run, because this thing is ready to tank. Okay, let's look at what was I gonna look at? Transport. We looked at Russell 2000. We looked at you know, we looked at financials. So let's look at Diamond. Nope, that's not the early indication. This was early indication. Highs and equal or a little low. That was early indication. The topping up process was happening. We did that, and we seeing same thing back here. Rolling over, made highs. However, we made continue making low or lower highs on MACD, and this thing is ready. It could go get back up, but sooner or later this could really tank again. When these things happen at the top of its bearish move, it's very dangerous. It's happening right at this top here, so that's when things could be very ugly, very dangerous. And SPY, looking at SPY here, this is similar thing happened back here, right there, and then right here. Divergence here, and then this thing can't tank, trying to get up a little bit, but then couldn't sustain. Same thing happened here. It starts to continue to roll over. When, you know, SPY is making higher highs, MACD continue to make lower high. This base was saying this bullish move we had about a month or so, it was nothing but this bulls keep pushing when it shouldn't be pushed. That's why these divergences are happening. These guys are bulls need to rest, and they need to reset, they need to recycle. But what happens is, you know, it's kind of like human emotion. Once you get into that role, you get into the pleasure moment, you don't want it to stop. So what you do is you keep pushing, pushing. It's kind of like if you keep working without rest, without a sleep, sooner or later you're gonna crash. And that's kind of what these divergences can really be helpful at, and especially when it happens after this huge bullish move. So this is SPY. Let's look at Qs. Okay, we're looking at Qs here, and I do wanted to look at actually this Head and Shoulders formation, and what we can see back here. Look at this angle of how high it went, but look at the MACD here, just really flatlining. We're slightly lower high there, back here as well. You know, higher high, lower high there, and then just this thing, it just continued grind higher. However, just MACD kept saying that there's no strength whatsoever, and so here's my point. We just looked at financials, transport, Russell 2000, Diamond, Spider, Qs. Every single index that we can find, I just looked at it. Every single pattern we just looked at today, it all broke this support level, the uptrend, the strong established uptrend support level. It is all forming some kind of Head and Shoulders pattern in the process of forming that right shoulder, as long as it comes back up and tests that old support as a new resistance. And also, all of these indexes that we just looked at, it is all forming that daily bearish divergence at the top, and I just proven it to you that it happened before, and every time it happens, this thing corrects, and this thing gets some steep correction, and that is a warning sign. It is playing out, and this is a time where if you have a long position in the market, if you're a long-term investor, I will take many stocks out of the way, stay in cash. If you're not so good with doing short, it's just to sit on the sideline, wait until we find some good support in a long-term kind of position. But I do think that we're heading to some kind of I don't want to say the market crash like it did 2007-8. Well, I do not have enough evidence to prove that yet, though there's a few significant indications But until then, I would really be cautious about it. Somebody like me who trade both ways, upwards, downwards, it's very exciting because I love to swing downside because it moves fast. You can make money fast, and it needs that quick intervention, which I love to do. So anyway, I hope this has been helpful to you. I hope that you guys can take heed on some of these patterns and these indications on this chart pattern, which could really be beneficial if you really know how to read them. So we'll have a great night. We have one more day trading this week, and I hope that many of you can able to be successful in this trading and make lots of money for your loved ones and family. All right, talk to you later.